An algorithm has just now predicted AMC stock could be over $61 per share by the end of 2024. Ladies and gentlemen, what will have to happen to see that come to reality? We'll discuss it here in this video. Now, do not think this is financial advice. This is not a recommendation. This is simply what an algorithm is saying. Who knows what is programmed into this algorithm? Do I think AMC stock can get to $60, $100+ per share? Sure, it's possible. But Adam Aron would really have to try for that. And he has not tried for that. Betting that Adam Aron will try for that, will try to get investors excited for AMC stock again, I think is betting against the farm, if you will. It's going against the grain in what has been happening lately, right? Adam Aron has done the opposite of try to get AMC stock higher. He can blame it on the box office. He can blame it on this. He can blame it on that. When it comes down to it, dilution is why AMC where the stock is where it is, right? And the reality of the situation is AMC stock would probably be in the 20s right now if Adam Aron had not diluted shareholders after the last earnings. And Adam Aron would have been able to raise a lot more capital in the 20s than even the last couple of capital raises that we have seen. So that's a spiel for another video. But here in this video, we're going to go over exactly that. Can AMC get to $60+ per share by 2024? What are my thoughts? What are the biggest catalysts that we have coming next for AMC stock? Hit that like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. So first things first, AMC earnings. Let's be honest. That's the next big catalyst for AMC specifically. AMC earnings are not going to move AMC. In my personal opinion, they could. Obviously, AMC probably beats estimates they have over the past couple of quarters now, but that is not what moves AMC stock. What moves AMC stock is Adam Aron, dilution, and really how they plan to get out of the hole that they're in. And most of the move actually happens during the conference call. So the first reaction of the numbers really doesn't mean a whole lot to me. Guidance could be important this time because there's a lot of uncertainty on how bad the box office is likely to be, where AMC sees current trends right now in Q1 for 2024. So the guidance could be a little bit more important this time around because, the street is kind of mixed on if 2024 is going to be a good or bad year for the cinema operators. Obviously, you're going to get a lot of exciting kind of talk for the second half of the year. The first half of the year looks like it's probably going to be off to a negative tone, so it wouldn't surprise me if Adam Aron comes out with some pretty low guidance for the first half of 2024 at the bare minimum. So with that being said, I actually don't think that is the biggest catalyst that we're going to have, at least to actually get AMC stock higher, right? I think that's going to be important. You don't want to see AMC butcher earnings. That wouldn't be good. But I don't think it's the biggest thing that's going to push AMC higher. The number one biggest thing that's going to push AMC higher is something I have been vouching for, something that I have told Adam Aron to do multiple times, and that is do what they did in 2022 that sparked a multi-100% rally. And that is say, hey, markets, we understand there's been a lot of dilution. We understand you guys are fed up with it. Be honest. Say we have to raise capital at some point, but we're not going to in the next 6 months. Give the stock a bit of a breather. Now, as I said in the last video, if you guys have not seen that video, check it out. But essentially, in this market environment, that could be really good news because when you have Nvidia doing very well, when you have AI stocks doing very well, as a fund manager, you have to be putting up some returns now, especially as the markets are hitting all-time highs. So if Adam Aron said we're not going to dilute shareholders for 6 months, that means that AMC stock's probably not going to fall, at least from that point, right? So hedge funds or institutions, they have to make a conscious decision. Do I want to be down on my AMC position from here over the next 6 months? Do I want to let that time premium work against me? Now, depending on the size of the short position, depending on, if they're up or down in their short position, which at this point, most of all shorts are up on their short position, they have to make that decision. Do they want to be down on their position for the next 6 months? At least. I think a lot of them would probably opt out of that and probably cover on some of their short positions, or at least hedge out the opposite way. They might buy AMC stock just because, I mean, on a fundamental valuation, AMC's trading pretty cheaply here. There's no fluff, if you will, from the retail trading community anymore in AMC. That's not a thing. AMC is not richly overvalued, maybe like it once was on a fundamental basis. AMC's pretty appropriately fundamentally valued. It's even discounting AMC's valuation for the fact that AMC could go BK in the future. AMC stock at $4 per share is not pricing in a successful future. Let me tell you that right now. $10, $15, $20 per share, then maybe you outprice the negativity over the next couple of years, potentially AMC going BK. Hopefully that makes some sense. Either way, I think it means AMC stock would go higher from here. And even last earnings, when AMC was $11.50 or so, I think AMC stock would have done very well if we had not gotten that dilution. The next morning, literally, I'll never forget it. You had rock solid earnings. Things looked great. Adam Aaron actually had people excited about the next quarter. But he did say, well, we have a writers-actors strike. That could hurt numbers if that does continue. Fine. AMC stock actually sold off a little bit on that. Was pretty neutral in after-hours trading. What happened? 2 hours later after the conference call, the writers-actors strike ended. About 10 hours later, Adam Aaron announced they were going to raise capital. You can't make it up, man. Like it was the most awful timing in the world. The big negative catalyst was gone, the writers-actors strike, and then we got another one with a capital raise. So yeah, some impeccable timing, if you will, from Adam Aaron on his part there. So obviously you get the gist there. We need to see Adam Aaron not do the same crap that he did last time. If he does give us a commitment to not diluting shareholders for, let's say, a 6-month time period until at least Q4 of 2024, I think that opens a window for AMC stock to rally exponentially from here. Again, that time premium, hedge funds and institutions don't want to waste their money at this point by being, stuck in AMC stock in a losing trade. Not when NVIDIA is going up 60% a month, right? Over 100%, $600 billion of market cap has been added to NVIDIA in 6 weeks. Yeah, you're not sitting in a position in AMC and you're going to basically be guaranteed to be down for 6 months. It's not going to happen. It's just not. That's not how markets are rolling at this point. Now, that's a big factor of this. If Adam Aaron does do this and give us a commitment to not diluting shareholders, then I think AMC stock has the potential to reach $60 by, the middle of the year, maybe by Q3. The second thing actually has nothing to do with AMC, NVIDIA. Now, NVIDIA is an interesting creature because, again, NVIDIA has gained about $600 billion of market cap in the last 6 weeks. Why I'm pointing out NVIDIA is because they are an easy target. They are almost, at this point, they will be the largest company in the world pretty soon if they continue at this pace. But it has been pretty much straight up. Now, there's not really inflows into our markets. If you take a look at this is the ETF inflows of the S&P 500. So what you'll actually see, and this is by year. So 2021, you had inflows of $37.9 billion. Fantastic year for stocks, for the most part. 2022, you had net outflows of $12.4 billion. 2023, you had inflows of $48.1 billion. In 2024, already, you have seen outflows of $36.4 billion. Wow. Okay, that's insane. But you have markets hitting all-time highs. Why is that? Well, it's pretty simple. Nvidia, AMD, Microsoft, Google, Apple, these stocks that have very large weightings in the S&P and the Nasdaq, the money is pooling towards them. Now, I'm calling this phenomena pooling. I don't know if there's a better word for this. I think it makes sense. The money is being taken from all other areas of the markets and put into Nvidia, put into AMD, SMCI, Microsoft, Google, Amazon, any company that is a big tech name with promising AI prospects. The money's being pooled from lower sectors of the markets and put into those stocks with large weightings in the markets. Now, just think for an example. Tesla has lost $200 billion of value in the last 6 weeks. Nvidia has gained $600 billion of value in the last 6 weeks. We are not seeing inflows to our markets. So where the hell is $600 billion coming from to go into Nvidia alone? That's not including SMCI. That's not including any other stock, right? That's just looking at Nvidia. Money's going from Tesla. It's going from AMC. It's going from PayPal. It's going from this stock and this stock and this stock, your lower sectors of the markets, and pulled into the AI names. And Nvidia has been basically straight up. I mean, it's kind of insane at this point. But with that being said, Nvidia over the past 3 earnings, giving you blowout quarters, blowout after blowout after blowout with guidance raises that are much higher than analysts expect. This time's probably not going to be any different. Now, expectations are a little bit on the high side. Nvidia last quarter guided for about $20 billion of revenue, plus or minus about 2%. So consensus estimates have Nvidia's revenue at about $20.2 billion. Just think about this. This is actually crazy. $6 billion was revenue for 2023's Q4. Then you jump to 7.2 billion. Then you jump to 13.5 billion. Then you jump to 18 billion. And now you're expected to jump to 20 billion. So I get it, right? I mean, the valuation's actually been coming down for Nvidia. Like, as they've been putting up better EPS, better earnings, the stock's actually gotten cheaper. But what happens with Nvidia is Nvidia tends to run up into earnings and then sell off after earnings. Unless you get the gap up like you got back here in May of 2023 that started really the whole AI situation. Back here, you sold off about 10%. Boom. About 10% over the course of the next almost 2 weeks or so. 2 earnings ago, Nvidia sold off from the high after earnings over the next month, about 17.5%. And the last earnings, Nvidia sold off about 2.5% the following day on another rock solid quarter. But you were down about 9.5% within the course of the next 2 weeks or so. So whether or not Nvidia falls big time this time around, I don't know. I mean, if there's a disappointment anywhere, Nvidia could be prone to fall 10% following earnings. I'm not going to make that bet. I'm just not. But it is likely Nvidia does sell off over the next month or so following Nvidia's earnings, because that is what we have seen the last 3 quarters. And I would argue this first quarter here, or even these other quarters, they were probably more shocking than what we're going to get this time around. I mean, there's the phenomenon of scaling, right? You're now at $20 billion. What are you going to guide to? 30 billion? Probably not. That would be a 30% guide up. Are you going to guide to 25 billion? It's possible. That would be what, a 15% guide up or so? Possibly. It's probably going to be like a $22 billion guide, which is a lot like a 10% guide up, right? 8%, 9% guide up, something along those lines. So the guide up percentage is going to be getting a little bit smaller. It has to at this point, right? How are you even scaling from 6 billion to 20 freaking billion dollars in a year? I mean, at some point that's going to slow down. Could this be the quarter where the guide just gets a little bit smaller? Potentially. That could set you up for larger downside. Point is, when Nvidia does sell off a little bit, that's probably when you get money going back into AMC stock and other parts of the markets. Now, we have actually already seen this correlation. So if you take a look at NVIDIA, the first real red day we have seen in a while was on February 6th. The stock was down about 4% at one point. You closed down about 1.6%. So NVIDIA still got bought up towards the end of the day. But what happened on February 6th? AMC was up 11% on the first little pullback we got in AMD. Look at Tesla as well. Some of the stocks that I think are being drained by NVIDIA. February 6th was the best day Tesla has had since multiple months, right? The stock was up 2.23%. And on February 6th, the S&P did basically nothing. It was pretty much flat on the day. Whereas IWM, the ETF for the Russell 2000, was up about 1% that day. And that was largely because of your semiconductor AI-related sell-off that you were seeing on February 6th. So I do think if NVIDIA comes out with not the greatest numbers, or which I wouldn't be willing to make that bet, but even if NVIDIA just does what it has done over the past couple of quarters and sell off following earnings, that could, free up some money to really move our markets, to move the lower sectors of our markets. And if you think about it, right, AMC is less than $1 billion market cap right now. It's not going to take a lot of money going into AMC to really make the stock do well. Now, here's this. AMC stock price prediction 2024 algorithm predicts bullish action, but beware of shaky fundamentals. The Coin Codex algorithm predicts a 518% increase in AMC stock by 2024, predicting a 12-month trend for the company, culminating with the stock trading at roughly $61 per share by next October. Now, could this be different? Could it be right? Could it be wrong? Obviously. Is it going to be closer to the end of this year? Maybe. It's kind of hard because this year is an election year, and I doubt this algorithm took that into the equation. Typically, stocks actually get a little bit of a dip around the election with the uncertainty of who's going to become the president, what kind of policies are we going to see, and then after the election, really like December, the end of November, tend to be very, very strong periods of time for the markets. And normally, even what you see during election years is a weak first half of the year and then a very strong second half of the year. So let me know what you think about this situation down below in the comment section. Hit the like button as well as subscribe to the channel. You guys have a great rest of your day, and I will see you in the next one.